JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 3rd of August 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So check us out here on jfdbank.com. and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one this time I'm going to pick up here on Shanghai Composite, just to see what's happening. Basically, some of these instruments I already looked at, but let's see where we are at right now. So, so far, the idea that I mentioned earlier on the Shanghai Composite continues to work out. We are still seeing a nice little hold up here, near just slightly below this upside support line, taken from the low of the 9th of March. We are trading above the 200-day EMA, but this is where the kind of hold up is occurring right now, this near the 3,470 territory. So, in other words, I would say that if this area somehow continues to provide resistance, we might see another slide. But if we climb above this barrier and we stay above this barrier, then it increases the chances for a possible move a little bit here to the upside. Now jumping into the German Index Dax, and here basically we can see that the index also continues to oscillate around that 21-day EMA and kind of continues to form this little range here, the one that I talked about last week and in the beginning and yesterday as well. So so we're kind of stuck here roughly between the 15,456 and the 15,681 levels. So for now I'm going to keep an eye on those still. Yeah, we got these little false breakouts recently, but yeah, it's still, the price action is still maintained within this little range. So we need to see a clear breakout through one of those sides before we could consider maybe the next short-term directional move. But that's a little bit easier said with the upside here. Let me just put this one on the chart here very quickly. But in terms of the downside, let me just copy this here, and there we go. In terms of the downside, if we get a drop below that 15,456 territory, and if it stays below it, yes, we might see a move lower, but we do have this this long-term upside support line taken from the low of the 19th of March, which could still provide decent hold up. However, of course, if this upside line gets broken, now this is where all the excitement for the sellers could come in, as this could open the door towards lower levels, guys, and then of course we'll take it from there. But at the moment, even if we take a look at the cash index, we'll see that the price is trying to move higher again. We're just fractionally above the yesterday's close, so that means that we are still above that 21-day EMA. So, but we're not really near this hurdle yet. So we need break of that barrier in order to aim for some higher levels. Quick update on IBEX 35. So the Spanish index, I talked about this one recently as well, and what I said to you that in order to get a little bit more comfortable with the upside, not only that we would need to see a nice good break of this downside line, but also push above the 88.22 level right here, and as you can see, this area continues to provide resistance. So in other words, if you want to aim for the upside, well, wait for at least a daily candle to stay above this barrier, and then we could slowly go for the next level, which could be around the 8,965 territory, and like I said, then we'll take it from there. With the downside here, it's a little bit tricky, of course. Now, if we drop somewhere below the Friday's low here, if we drop below this area, this is near the 8,665 zone, approximately around here, then yes, we might see maybe a bit of a a corrective move here to the downside towards the 200-day EMA, and then we would take it from there, of course. But again, for now, it is how it is. We're kind of stuck here a little bit, and so wait for a clear breakthrough one of these barriers first. Nasdaq 100 so drifted yesterday to the downside a little bit, however managed to still remain fractionally in the positive territory. So it did close below that psychological 15,000 territory, but looking at the cash index right now, we can see that the price is trying to climb back above that psychological 15,000 zone. So either way, I mean, it doesn't matter. I mean, for us, we're still keeping an eye on these two trend lines here, these tentative trend lines. So if we clear this downside one taken from the high of the 26th of July, then yes, this may open the door towards the upside again. But for the downside, I really need to see a break of this upside line here taken from the low of the 19th of May, and a drop below this 14,787 territory, which is marked by the low of the 27th of July. If we drop below this area, at the same time, we would be placed below the 21-day EMA, and potentially more sellers could join in. So, so that's why for now, keep your eyes on these two lines and these two trend lines. So let's see which one's going to break first. This is just, yeah, there we go. The Dow Jones Industrial Average closed in the negative territory. However, the index created a new all-time high and that level is near the 35,192 zone. So as you can see, it overshot the previous one just by just a little bit. The previous one was at 35,171. So we pushed higher, we then kind of failed to stay above it, and we drifted back down. So of course, this kind of creates this little concern here that maybe not all is good here in the bull block, and yep, could see this one sliding a little bit more to the downside. However, at the moment, guys, we are still holding above the 21-day EMA. As you can see, it sometimes does act as a very nice area of support, like for example back here on the 28th of June and also on the 8th of July. It is, let's see if it rebounds from this area. If it does, certainly if you want to aim for the upside, well, a push above the 35,192 territory would be needed. So be very careful on that one. And if it does climb above this area, above this high, the current all-time high, then of course, yep, the sky's the limit for this one then. And well, we could maybe target levels like 35,500 level or even above that. For the downside, well, if it drops below that 21-day EMA, this may clear the path for a larger correction to the downside towards this upside support line taken from the low of the 4th of March of this year, of course. Now, another index, but this one's a dollar index, and you can see that we are currently staying just, we climbed above the 200-day EMA on Friday. Yesterday we did drop initially below this 200-day EMA, but quickly the bulls pushed the index back above it and remained for the day above that 200-day EMA. Today we're seeing another test of this 200-day EMA. Can it stay? Let's see, of course. If it does stay, then maybe we could see a bit of a further correction here to the upside towards this downside resistance line taken from the high of the 23rd of July. And then of course, yep, we could maybe see a drift back down here, but if of course this little short-term tentative downside line holds, but if it breaks and we see a push above the 92.32 territory right here, this one at the same time could see the index climbing above the back above the 21-day EMA, and this would place it kind of above all of its EMAs then. So, and potentially more buyers could see this as a good opportunity to step in. But again, let's be very careful for now here. If, like I said, this 200-day EMA continues to provide support, yes, we might see a push a little bit higher here towards this downside line. If it holds, another slide could be possible. Now jumping into silver, and yes, here silver is, haven't looked at silver by the way for quite a while, but yeah, it's quite an interesting one here. I mean, you can see that it's kind of trading near this 200-day EMA. From the very short-term perspective, I mean, this little formation here, it could be seen as a potential bullish flag here. So we have our pole, which is the 29th of July candle, and we have this little decline here, and within the kind of the body of the pole candle here, and yep, this little correction here could be, like I said, all this here could be seen as a potential bullish flag. However, before we could consider that scenario, certainly some of the breakouts are still needed, and for the upside, basically we need to see a break of this little this upper side of the potential bullish flag here, and just to be maybe also on the safe side, a push above the 21-day EMA might do the trick for more buyers, and we could see this one, yep, pushing a little bit to the upside. However, there's a little issue here, and that's the little downside resistance line right here. So basically this kind of could add a bit of strength here, for the kind of downside scenario. But again, that's why we need to kind of evaluate all the potential scenarios here. So, but if this, of course, if the upper side of the potential bullish flag here, or more, I would say more bullish pennant, if it breaks the upper side here, then of course, yes, it would also break this downside line and could open the door towards a higher level. So basically this is where it could work out well for the buyers. But if the emphasis is still going to be on the downside line, this one right here, taken from the high of the 11th of June, well, I mean, it could continue sliding here for quite a while. So again, we'll keep that in mind. But for me to get comfortable with the downside, probably I would like to see maybe somewhere a drop below this territory still, the lowest point of July near the 24.50 zone. And I do understand that we could be missing out on a bit of territory here, but to be honest, I mean, if it drifts, for example, lower here, but let's say finds support somewhere near this barrier, near this hurdle, the low of the 21st of July near the 24.76 territory, and then, for example, rebounds back up, then maybe, just maybe, we could be seeing here a potential inverted head and shoulders pattern. But again, for now, I mean, that's just an idea, rough estimation. I mean, at the moment, let's see how this idea will work out, the potential bullish pennant pattern. If it doesn't, okay, that's fine. We'll go back to the drawing board. But yeah, that's why my preferred downside scenario is only from around this 24.50 zone. Jumping into WTI oil here very quickly. So yesterday, strong decline here, drifted back below the 21-day EMA, and of course all this kind of created this little bearish atmosphere here. So the 21-day EMA didn't provide support. So this is what I talked about yesterday, that in a way, if we correct a little bit lower, but the price still remains somewhere above this 21-day EMA, then maybe a nice little rebound here could be possible. However, it didn't. It drifted back down, and also what I said to you yesterday, that my preference here for the downside is to wait maybe for a violation of this territory right here, this area between the 70.43 and the 70.79 zone, somewhere around here, because you can see that yesterday played out as a perfect area of support. And this is what I talked about previously, that I'm going to keep an eye on this area, and if we clear this area, then yes, a larger correction to the downside could be possible. Now jumping into Litecoin very quickly. So far so good. I mean, the idea that I mentioned previously was that we might see here a bit of a range here, and which, as you can see, continues to play out. So the upper bound of that range is still holding. So If you want to go for the upside, certainly a break, and we would like to see the daily candle staying above this barrier here before, let's say, getting a little bit more comfortable with the upside. For the downside, well, if it drops somewhere below this midpoint of this little range, which is roughly around the 125, 126 territory right here, then we might consider a bit of a decline. Bitcoin Cash also within the range, so also keeping an eye on these two areas here, and also if, like I said, if it drops somewhere below the midpoint of this this little range here, then yeah, then we could start maybe looking at the possibility of seeing maybe further declines. AUD/USD very quickly. So, guys, of course, the pair did react today to the news. We did get the RBA interest rate decision with its statement, but of course, you can always kind of, if you want a bit more details on that, you can have a look at the video that my colleague produces, and he will cover that as well. And you can get the information from there, so you can see you can check out those videos later on after mine around 7 o'clock GMT time. So yeah, so keep an eye on that one, and like I said, you can get the fundamental side from him, so you can check his videos out as well. But looking at this picture here, the technical side, you can see that the pair has moved higher. It reacted positively, and it now kind of reversed to the upside, broke the downside line here, taken from the high of the 11th of June, and we're now coming closer to this 0.7410 zone, which I've mentioned to you previously. Now, yesterday when I was covering this pair, I said that as long as this downside line continues to provide resistance, we will continue targeting the downside. But as you can see, we reversed back to the upside. So basically, this arrow here is, to be honest, no longer valid. We're going to recycle it, and we're going to use it this way. However, I would say like this, that given that we have broken the downside line, but we are struggling still with this 0.7410 zone. If it fails to provide resistance, then yes, a nice good break above it would also place the price above the rate above the 21-day EMA, and potentially more buyers could join in. But if by any chance this daily candle today remains below this downside line and stays below this downside line, yes, well, I mean, maybe we're not even done with the downside. However, I will reevaluate this again tomorrow just to see where we are at. But at the moment, it's quite interesting. Let's see if we can actually overcome this 0.7410 territory. Jumping into US dollar against the Turkish Lira, and a while ago, if you remember, I talked about this one, and I talked about this 8.47 territory, which we managed to violate and break, and this confirmed a forthcoming lower low. And my next target, as I said, was the 100-day EMA, here shown as the green line, which we managed to reach together with the 8.2650 zone, approximately around here, marked near the lowest point of June. So as you can see, we have moved lower. We reached the 100-day EMA, and yeah, let's see if we can continue drifting further south. Today we do have some news coming out of Turkey, so we have the Turkish CPI figures coming out, so let's see how that's going to play out. Those are coming out in around 40 minutes time, but yeah, at the moment everything's working out, so far so good. So let's see if we can slide further. I'll consider that slide if we drop below this 100-day EMA, shown as the green line. US dollar against the Russian ruble, guys. I mean, this is what I talked about previously as well, and I told you that what I'm keeping an eye on here is maybe the potential falling wedge pattern. However, it didn't really work out, so we need to kind of admit that. But this is what I said as well, that sometimes these patterns do work out, sometimes they don't. Of course, we always need to, like I said, be careful with that, and if it would be even a falling wedge, then we would still need to wait for a break of the upper bound of it. So we didn't really get that, so instead we got to break through the lower one, and we can now ignore this kind of the whole idea. But what's interesting here, what we cannot ignore, is this little short-term side support line taken from the low the 11th of June, which, as you can see so far, is doing its job and providing good support. Now let's see if we can rebound from this area, if this from this upside line. If we can, then it's going to be interesting to see if we can reach this downside line. Basically, in other words, we can see that the pair is coiling up, so it will be interesting to see which way we're going to break out in the end. At the moment, it's of course it has a greater chance to break out to the downside here, and if it stays, if the daily candle at the body of this daily candle stays below this, then of course yes, we'll aim for further declines. US dollar against the Japanese yen, guys, and we are approaching the key support zone. I talked about this yesterday, and what I said that in order to aim for the downside, basically we need to see a breakthrough one of these lines, one of these tentative trend lines, and we broke the upside one. We fell below this 109.36 territory, so we're drifting further south, and to be honest, right now what I'm keeping an eye on is the 109.06 territory marked by the lowest point of July. If we break that and we stay below it, then certainly my next target is the 108.34 territory, approximately around here, marked near the lows of the 7th and the 11th of May, and it could come here closer to the 208 EMA, which also could provide a bit of support. So for now, long story short, I'm leaning a little bit more towards the downside. However, a confirmation break is still needed. Gbp Jpy, so this one's quite interesting, and I've mentioned this this pair last week, if you remember. I said that if we see a little bit of a decline here, a little bit of a correction, then keep your eyes on this downside line, which might act as a temporary support, because as you can see, we are kind of drifting a little bit lower, but we're kind of sliding alongside this downside line, so on top of it, and if it continues to somehow provide support, then yes, a nice rebound, a nice reversal here back to the upside could be possible. However, if it starts moving lower and breaks back below this, then yes, it could open the door towards lower areas. However, I would prefer to wait for a drop somewhere below this territory, below the 150.73, and if we drop below it, then yes, we could consider maybe a possible test of the 148.53 territory right here, which, or actually, let me just rephrase this, 148.46 territory, which is the lowest point of July, and around here, around this level, we do have the 200-day ESML, 200-day EMA here as well, yep, then we'll take it from there, of course. But at the moment, I'm considering, like I said, a potential maybe hold up here. But let's see if it does that. If it continues to hold above this this downside line, then don't forget that we might see a bit of a retracement, not a retracement, but a rebound here back to the upside. EURUSD, guys. So this one managed to reach my target. So my target was the 1.0740 territory, approximately around here, marked by the low of the 18th of January, and or in other words, I think that's the lowest point. Yep, that is the lowest point of this year. And as you can see, a beautiful hold up happened here. So far, so good, I would say. And another thing that I'm going to keep an eye on right now is from the short-term perspective. I'm going to keep an eye on this little downside resistance line. It's a tentative one, of course, but it will be quite interesting to see if it continues to provide resistance. If it does, then well, maybe we're not done with the downside. But to be honest, to get a little bit more comfortable with the downside now, I will be looking at this 1.0740 territory. A break below it would confirm a forthcoming lower low, would confirm a new low for this year, and then yes, we will take it from there, guys. And my next target then could be the lowest point of November near the 1.0648 level. And finally, EURUSD. So yeah, the pair is still trying to climb higher. However, what I said to you yesterday, if you remember, that if you want to aim for the upside here, yes, at least wait for a push above last week's high near the 1.1909 zone, but then we need to be very careful near this downside line, which if provides resistance, could kind of attract more sellers again, and the sellers could take advantage of the higher rate and push this one lower. So that's why for now, I mean, if it climbs above the high of last week, then yes, we need to be very careful here. But of course, if it breaks the downside line, then yes, the higher levels could be met. But at the moment, guys, I mean, maybe we could be due for a bit of a corrective move before a push higher. But again, let's see how that's going to play out. If it decides not to travel above the high of last week, then certainly all eyes are going to be on this little inside swing high here of the 22nd of July near the 1.1830 territory. A nice drop below it, yep, may open the door towards the lowest point of July near the 1.1752 territory. So guys, that's it for the session. Thank you very much for watching and listening. I really appreciate your time. That was a very quick session just to see how everything's getting along here. So I've looked at some of the instruments that I looked at previously, so some new ones. And join me tomorrow morning, as always, at my Traders Espresso at 6 o'clock GMT time, just for another review. And yeah, so we'll have a look at some of these ones just to see how everything's progressing, and some new ones, and then we'll take it from there. But for now, guys, have your stop losses in place. As always, take care of yourself and everything will be fine. So thank you very much, and bye-bye.